Good afternoon, everyone. Thank you for coming to our session. I realize with these breakout sessions, you're all always competing with people in other sessions, and I know the sort of Tiger Beetle guys are next door, a very interesting talk as well, so I do appreciate you all coming out. So, Chris approached me a few weeks back to sort of think a bit about a session, and since this was a conference happening in South Africa, I thought to do something specifically focused on digital payments in South Africa. I think sort of this is worth doing, as you'll see throughout the presentation, due to the fact that South Africa is quite different from a lot of other countries on the African continent in important ways, and this really has implications for the way we think about digital financial inclusion in South Africa. So, it would be amiss of me to not have a small plug for the work that we do. So for those of you that don't know, I'm the director of an institute called the Financial Innovation Hub based at the University of Cape Town. We're sponsored by the Interledger Foundation, and sort of as you can see on the figure on the left there, our goal is really to provide research and thought leadership with respect to financial technologies and their application on the African continent, but also we serve this really important teaching and educational offering where we have a master's degree in financial technology. I know some of you in the room may have had some interactions with our students over the course of the last 2 days, and sort of through this funnel approach with research informing how we teach, and sort of all of that informing our thought leadership, we also try to help students innovate through the creation of startups, specifically in the space of digital payments in South Africa. Our website is below there, so please do check our work out. So I wanted to start this presentation with a question. I know we've sort of spoken a lot this morning, especially in Costa's session, about financial inclusion. I do want to draw a distinction. I'm speaking here about financial inclusion. I think sort of Costa had the term digital financial inclusion on the board. And the question is, well, does South Africa have a financial inclusion problem? So I'm showing you numbers here from a survey conducted by the Finmark Trust in South Africa. And what you'll see here is that 82% of adults in South Africa have a bank account. In fact, the average South African has 1.4 bank accounts, right? So many South Africans have more than one bank account. And to just sort of benchmark that 82% number, if you recall from Costa's slide, the sort of number for bank accounts in sub-Saharan Africa is 55%, right? So again, considerably higher bank account usage in South Africa relative to its peers. The number on the right, if you think about financial inclusion, well, 96% of adults in South Africa are financially included. Now, that number may seem very high. South Africa is a developing country. How can that number be so high? Well, if you think about how we measure financial inclusion, this is primarily with something like access to a bank account. So we already think that that number should at least be 82%. And then we sort of think a bit about access to financial services. Now, in many cases, financial services require a bank account, but in the context of South Africa and many sort of developing countries, there's a sort of large and very much active informal financial market as well. So in South Africa, this takes the form of two products: informal loans extended by individuals or agencies called mashonisas in the townships, and secondly, stokvels, which are collective investment schemes. I see John in the room as well, who's done some work on this through Africa. So if you think a bit about these bank accounts, we think about these community investment schemes, and we think a bit about these access to informal loans in townships, then you know that number of 96% actually seems quite plausible. So you may think, if our job is really to ensure financial inclusion happens, well, we seem to have achieved that in South Africa. I should really just pack my bags up. We should all head home. Job well done. But I think sort of transitioning to Costa's presentation this morning, he spoke specifically about digital financial inclusion, right? And I think that that's an important distinction. And I think that's best highlighted when you sort of look at the South African use case, where despite the fact that most adults have a bank account, there is very low engagement with respect to digital financial products. So again, survey information shows that 48% of adults in South Africa withdraw all the money from their bank account as soon as they're paid. So for those of you that aren't familiar with South Africa, a very common sight is on a payday. There are these large and long lines outside of ATMs for individuals to actually take their salary out and then transact in cash, right? So in many cases, bank accounts are simply a medium in which to receive your wages. Individuals then still prefer to take all of that money out and transact in cash. And the second way that you sort of see this low engagement with the figure on the right, which in the sort of light blue bar shows you the percentage of the adult population that has access to internet across a lot of African countries, and the sort of dark blue bar showing you the percentage of internet users who are using mobile payments. What you're going to see is actually quite an interesting pattern that increasing access to internet does not necessarily lead to increasing usage of digital payments, right? So if you look in the case in Kenya, where so few individuals actually have access to internet, but yet for those that do, the use of digital financial products is quite substantial. You contrast that with the case of South Africa, where sort of 3 out of 4 individuals have access to internet, yet it's still the case that less than 25% of those individuals are actually engaging with digital financial products. So it seems that in South Africa, we've solved the financial inclusion problem, but we sort of seem to be struggling with this digital financial inclusion problem. And of course, that has really important implications for things like reducing inequality, wealth and income, reducing poverty, et cetera, et cetera. So it's clearly the case that cash remains king. So over here, I'm showing you some numbers from a recent payment study commissioned by the central bank in South Africa. So what I'm showing you here in the dark blue bars is the percentage of all transactions in South Africa that happens by that medium. So in this case, it's cash for the entire population and then split up by income groups. And in the light blue bar, you're seeing that same amount, but for the sort of value of all transactions. And for the entire population as a whole, 56% of all transactions in South Africa happen in cash. Right? The average transaction amount is around 200 Rand. You can see that usage goes up for low-income consumers, where 69% of all transactions in volume are made in cash. You can see that in value, that translates to about 38% of all transaction value. And even quite surprisingly, even for high-income South Africans, you're seeing that 34% of all transactions made by high-income South Africans still happen in cash, right? So as much as we see that there's a lot of cash usage amongst low-income South Africans, even for the high earners in society, there is still a considerable use in cash, or a considerable use of cash. Secondly, I'm putting debit cards up. Why debit cards? Well, debit cards fulfill a very specific role in the South African society. So the South African government pays social security payments to bank accounts, and everyone that receives a social security payment or a social grant from the government gets a debit card, right? So there are 11 million people on the social security system in South Africa. So there are 11 million people that get bank accounts with debit cards. Most of these accounts are actually held at the post office. So again, then unsurprisingly, you're going to see high debit card usage. So for the overall population, 34% of all transactions happen with debit cards. You see that number rise a lot with high income, where you're seeing a lot of usage both in volume and in value as well, right? And you're even seeing sort of in the low income communities, 48% of all transactions in value actually happen with this debit card. Third, banking apps. So what do I mean by a banking app? You're logging into your banking app and you're using the banking app to either send someone money, or you're using it to buy things like airtime, electricity, or pay for any of the government bills. And you can see there's some usage over there, 5% for the population as a whole. But then finally, we get to digital payments usage. And what you're going to see is both across value and across volume, digital payment uptake is quite low. So overall in the population, in terms of transaction volume, 0.9% of transactions in South Africa are made by means of digital payments, and in volume, that's around 1.5%, right? Again, sort of speaks to the story that despite everyone having a bank account, the sort of usage of digital payments remains low. So a national question then is, well, why is this the case? And I think that sort of there are two pieces to this puzzle, and this is sort of something we'll get through in the panel as well. So from that same payments study, which was a nationally representative study, individuals were asked, well, why do you use cash? And the most popular reason here, 31% of respondents said that, well, I use it because it's convenient. So it's easily accessible, all the merchants accept it, it's a really easy means of transacting. 18% said, well, there are no charges or fees involved with using cash. Cash is costless. 11% said, I receive my salary in cash, so why would I go to a bank account to deposit that? 8% say, well, cash is safe, and I think sort of this speaks to trust with respect to financial institutions. And then again, 8% say that they have no bank account. But it seems at least here that sort of the main reason driving cash usage here is its convenience and the fact that it's costless. Now, another way to think about the cash puzzle is that, well, if consumers are saying that cash is convenient, well, there must sort of be an explanation on the merchant side for this as well. So this is another survey conducted in 2022, where they essentially sort of survey SMMEs, small to medium-sized enterprises in South Africa, and they ask them, do you use one of the following products? And what you're going to see is that 90% of SMMEs in the country report having a cell phone, 51% report having access to the internet, 49% report using social media to market their business, 47% respond to using an email, 39% have a cash register, 35% use a computer, 32% have a website for their business. But only 28% of these companies actually have a point-of-sale device that can accept digital card payments, right? So despite the fact that a lot of these merchants have cell phones, have internet, have computers, they don't have devices that can accept digital payments, right? So I think when you speak about the convenience for consumers, one potential explanation for this is the sort of lack of uptake in terms of sort of hardware that will enable merchants to accept digital payments from their consumers. And obviously, this sort of this large usage of cash imparts a lot of cost on the consumer. So this is from a MasterCard study that speaks to some of the direct costs of cash, ATM fees, bank charges, the cost of sending money overseas, and some of the indirect direct costs, that is cost of transport, safety risks, and also the foregone interest with respect to holding cash. And MasterCard put those numbers at the direct cost to cash in the South African economy at 9 billion rand, the indirect cost at 14, and the total cost of cash to the South African economy at 23 billion rand, or 0.56% of the South African gross domestic product. Right? So the cost of cash is particularly sizable to the economy. But cash is also very impractical. And I was at a convention last week where the governor of the South African Central Bank spoke, and he made a very interesting observation saying that South Africa has one of the highest denomination notes in the world. So I'll say that again. We've got one of the highest denomination notes, right? So the 200 Rand is the highest note we have in South Africa. So if you were to think about someone going to withdraw all their salary in cash, you think about inflation, you think about sort of wage inflation, cost of living inflation. It's increasingly the case that sort of living is getting more expensive, but that has implications for the amount of physical cash you need to walk around with. So let's do a thought experiment. What I'm showing you there is the average household income in South Africa in the year 2000. And what I'm showing you there is the 10 Rand, the 20 Rand, the 50 Rand, the 100 Rand, and the 200 Rand notes. Now, the South African Reserve Bank reports on the number of notes in circulation. So let's just say you went to an ATM in the year 2000, and the ATM is going to print notes in proportion to the amount of cash, different notes that's in the South African economy. What would that salary look like in terms of notes that you receive at an ATM? 39 10 Rands, 31 20 Rands, 650 Rands, 20 100 Rands, and 4 200 Rands means you would leave with 100 banknotes. Now, in the last 24 years, we've seen inflation. So the average household income in South Africa has risen to nearly 14,000 Rand, but we've not seen the introduction of any new banknotes, which means that if you're actually heading to withdraw cash, in today's world, to withdraw your physical salary would mean walking around with 337 physical banknotes, right? So cash is not just expensive, but cash is also becoming increasingly inefficient to sort of use as a means of payment. And I think sort of this really just speaks to this sort of like pressure, I think, building up in the South African economy for this transition to digital payments in this space. So I just wanted to sort of have that as an introduction just to set the scene for a panel discussion. Please allow me to introduce our two panelists here. First up, we have Julian Kanjere. Julian is the founder of Mandla Money, a fintech startup that allows peer-to-peer payments via WhatsApp. Julian is a software developer by training and also lectures at the University of Cape Town. And then we have Kungela Mzuku, who is a platform owner at Nedbank, one of the major banks in South Africa that is tasked with bringing sustainable principles to the technology used within the bank. Kungela also lectures at the University of the Western Cape. Thanks so much, Kungela and Julian. Okay, so I also just wanted to acknowledge this is a really full circle moment for me. Kungela was in the first cohort of our master's degree in 2018. Julian was in the second cohort of the degree in 2019. And 6 years later, they've gone on to really disrupt the world of financial services. So this is just a really nice moment and speaks to exactly the kind of thing we're trying to do at the University of Cape Town, which is to essentially give students the skills that allows them to fundamentally change finance. And I'm very, very proud to have them both part of the panel over here. Kungela, I'm going to start off with you. So for those of you that may not know, the South African banking sector is highly concentrated. We essentially have 5 banks that serve most of the market. Kungela works at one of these banks, Nedbank. I think why Nedbank is important to this discussion is they're really sort of the bank that I believe is at the forefront of the open banking revolution in South Africa. So open banking here, the idea that banks are able to open API access to fintechs and third-party developers to share information on consumers, but financial transactions as well. So Kungela, I was hoping you could maybe just tell us a bit about Nedbank, some of the work it's doing in the space. Over to you.
Awesome. Hi, everyone. So my role at Nedbank is looking at green engineering, which is a fairly new space, and that's all around sort of tracking emissions using code for Nedbank's technology real estate, which is pretty cool. And I also think, it's sort of a weird job to have. Whenever I tell my friends, it's like, what do you mean by that? But Nedbank we're actually a green bank. And everyone sort of calls it that. We have about 8 million customers, 25,000 employees, and we also look after, within my team, all sorts of things, sort of the cloud environments, data centers, you've got the mobile apps, and then you've got this exciting area which we call beyond banking, sort of this idea of, opening up our technology assets to all the various players in the market. And an interesting fact is, pre-2019, actually, Nedbank was one of the first to have an API marketplace. So we have more than 15 APIs. And it's pretty cool. I think all the rest of the banks have also sort of come into, that space in terms of their offerings. And they're all quite different as well. So Nedbank APIs are more around sort of the consumer. There's a wallet API, rewards, but things that are really much more closer to retail. And then we've also got things like Absa as well, who's got their own API marketplace, which is more geared towards things like getting FX rates, looking at the more enterprise types of offerings. And then, FNB and Standard Bank, which is another interesting one where they have such a big footprint in Africa. And for them, they'll provide sort of API gateways more that are much more like region specific, so offering 1 or 2 APIs in Zimbabwe, Kenya, and all the various countries. So I think there's quite a lot being done, and it's pretty cool. Yeah.
Thanks so much, Kungela. So I thought it would be a nice change of perspective. We have sort of Kungela, who works at a bank, and we have Julian, who is the co-founder and CEO of a mobile money wallet in South Africa. So Julian, I was hoping you could maybe just tell us a bit about your company, Mandla Money, the origin stories, what you guys do, and sort of maybe how you differentiate yourself from other players in the space.
Cool. Well, thanks for having me. So my name is Julian Kanjere. I am the founder at Mandla Money. Effectively, what we are trying to do is help people to be able to make P2P payments, access value-added services, all from their mobile device via SMS, via USSD, and via WhatsApp. I think our origin story, if this had to, if we had to trace it back to where it started, we started with this question of an interest in cryptocurrency and stable coins, and this idea that, yes, cryptocurrency is meant to be the next evolution in payments, but the way that people access crypto and stable coins is currently very complex, right? You have this concept of private keys, you need an app, and all these different exchanges, and trying to figure which platform do you go with was just a little bit overwhelming, even for people in this room. I think once you then get used to it, you engage with it a bit better. But for everyday consumers in low-income communities and in informal markets, how will they then be able to take part in this alternative financial system? So we really set out with this question of how do we allow people to send and receive crypto via SMS or via USSD? This was sort of the starting point, which effectively would allow people to make offline payments. And then the natural evolution of that is we then took some time. We built an SMS wallet where we integrated with XRP Ledger that would allow people to send and receive XRP or XRP issued assets, stable coins, and so forth. And then once we had that built, then we were like, well, the natural evolution of this is we should allow people to do the same via WhatsApp. And I think just following on from the previous session, not because we love WhatsApp, but because people use WhatsApp in, WhatsApp is everywhere in South Africa, in Zimbabwe, in East Africa. Like the level of penetration of the app is just incredible. So if you want to try and get people to download a new app altogether now, like you have to have a really compelling story why they should download your app. But if you actually just deliver financial services through WhatsApp, that just seemed like a very intuitive step for us. So we then went on to develop a wallet accessible via WhatsApp, so effectively mobile money via WhatsApp. If you're from Kenya, you think of this as M-Pesa via WhatsApp, except we're using crypto rails to move the money. So that was like our origin story. We're sort of at a point of inflection where we are figuring that, okay, we've got this offering, but we still need to perhaps integrate with fiat and have normal banking rails, and this is where maybe partnering with some of these open banking APIs will come into play. But I think more holistically, just looking at delivering 24/7 retail financial services via WhatsApp. That's what we would say. That's what I would say we're doing. You can scan that QR code and actually just play around with the WhatsApp wallet as well.
Awesome. Thanks, Kungela. Thanks, Julian. So to hop right into the panel here, a major theme that came up in the recent SARB payment study was this idea that sort of point-of-sale machine adoption is very low in South Africa. So to just remind everyone, that number's at 28%, despite the fact that sort of there's, I don't want to say universal access to debit cards, but large-scale access to debit cards in South Africa. The Reserve Bank goes as far to say that they believe that this lack of hardware on the sort of side of merchants is one of the major impediments to sort of digital payments in South Africa. So, Julian, in the context of sort of this high access to bank accounts and debit cards, to what extent do you think the dominance of cash is a story about consumer preferences for cash versus a hardware story with respect to the low number of merchants who are actually able to accept digital payments?
Yeah, so I think that's a very nuanced matter. If I look at it as a consumer, I think there's a strong component of this where there's consumer preference for trust, right? Like, do you trust the financial services and the banks that are offering you these financial services? So if I'm a consumer, as we've already seen in some of your slides, if I get paid today, then, and particularly in informal markets and so forth, if I get paid today, I'm going to go and withdraw all of my money, right? So that statistic around financial inclusion being 80%, 90%, whilst that's high, I think the better stat for me is how often do you then use your bank account, because that bank account usage is then once a month. And that speaks more to that trust in the system, right? Do I trust my money in the bank, number one? And then number two, it also speaks to understanding the transaction costs associated with having a bank account. So often you'll find that those banking fees, banking charges, and service fees will end up adding up and becoming significant again for a consumer in a lower income market, and they'll then rather just draw all of their money at once, right? Get that one transaction fee, and then be able to transact with cash wherever they go. So I think those, in my mind, are sort of the primary drivers why cash is still king, and not so much the availability of a point-of-sale machine. And then I think the other comment there around point-of-sale machines is often you'll find in some establishments that they will have a minimum amount that you have to be paying with your card for them to use the point of sale, because it's going to be expensive for them to use it on smaller amounts as well. So that now is placing a burden on the consumer to say you have to have a minimum spend in order to transact digitally. And then in that case, then you sort of have to just revert back to cash. So I think, yeah, for me, it's perhaps not so much the availability of the point of sale machine, but it's just, as a consumer, do I trust the financial system and am I comfortable with the fees? If not, then I'm just going to withdraw my money and stick to cash.
And I think just sort of add on to that, the sort of cheapest point of sale device you can buy in South Africa is 500 Rand, which I think for many sort of SMMEs is still quite a steep amount. So, so Kungela, Julian sort of spoken, I think, a lot about sort of this cost aspect of sort of running point of sale devices, the fees associated with that. Do you think that the sort of low uptake of these devices is simply just a fee story? If they were cheaper, more people would use them? And what specifically is the bank doing to try to, increase uptake of these devices, especially amongst SMMEs?
So I definitely agree with what Julian has shared, and I do think costs sort of do somewhat play a role in that. But we've seen quite a few collaborations with between banks and some of the newer startups where they building things like mobile point of sale or being able to use your actual device to actually make payments as opposed to now buying an additional device on top of what you have. So yeah, for me it's like mostly on the merchant side. They have so much to worry about. One of my friends opened up a restaurant, and only 2 weeks before opening did they actually think, okay, we actually need a point of sale device, and they were able to sort of create a profile on Yoko, and it was delivered literally the next day. So I do think there's more and more solutions like that, and especially for, I guess, using QR codes on the mobile side, those ones actually don't have any upfront hardware costs, which is pretty cool. I also think, when I think about point of sales, as well as ATMs, because essentially it's like a point of sale is like a mini ATM that's now, within the store. And we've seen, more people are using point of sale systems. It's not as, a big uptake, but they're using it a lot for things like cashback, where you go into a retail store and you say, can I have 100 Rand, and then they'll sort of give you the money. So that withdrawal of money, I think, has been, doing quite well, as well as things like loyalty, rewards programs, Checker 60, where you've got cards you can tap for, various, I guess, discounts and the likes. Yeah, a bit of both.
I mean, I think an important thing to mention as well is that there's a session later this afternoon about sort of the difficulty of sort of having undocumented migrants and sort of access to financial services. And I think sort of that talk specifically focusing on sort of consumers trying to transact. But conversely, in the context of South Africa, where you have a lot of sort of non-residents or undocumented migrants who own the sort of small stores that exist in the townships, if you think sort of like KYC, know your customer onboarding is onerous. KYB, know your business onboarding is even more onerous, right? Company registrations, financial statements, et cetera, right? So in many cases, the ability to acquire a lot of this hardware to accept payments with respect to sort of the mountain of regulation that imposes on a lot of these small companies is potentially also a factor that's at play. So given sort of these issues with these, I want to say, more traditional means of accepting digital payments, Julian, I wanted to get a sense from you. What role do you see sort of mobile payments technology specifically? I know Kungela spoke about QR codes, but what do you see the role of mobile money as in a country like South Africa in terms of sort of driving adoption of digital payments?
So I think I'm very much an advocate for making use of alternative mechanisms for payment and sort of like thinking outside the box, right? So I think if we maybe look the last 10, 12 years in South Africa, we had these public payphones where you put in some coins and you could make calls, or you could buy a card that's preloaded and make some phone calls, right? And then with advances in technology and so forth, and now these have become redundant, right? But like, can we repurpose those public payphones and maybe make them, internet hotspots and so forth? So I think just coming back to the concept of mobile money, right? Like we can have digital payments without necessarily having to have these point of sale devices, right? So like we could sort of take a look and say, what do people already have? Specifically, let's say looking at informal economies, at spaza shops and so forth, like what equipment is already present there that can be used to accept payments, right? So the one thing that's already there is a phone, a mobile phone. There is most definitely going to be a smartphone. So what sort of solutions can we come up with that allow people to accept payments via an existing device, via these mobile devices, via a smartphone, right? So I think that for me is that missing link of driving digital payments and digital inclusion within informal economies is leveraging the existing devices and basically making use of mobile money within that space.
So this is a question that I always wonder, and I think it's always a very difficult one to answer, so apologies in advance, Julian, but for sort of someone that works in the mobile money space, mobile money has notoriously been sort of slow to get off the ground in South Africa. If we sort of compare the trajectory of mobile money usage, I mean, I know sort of many years ago, MTN tried, they're trying again. So why do you think it's been the case that mobile money has been so slow to take off in South Africa, and are you hopeful for sort of increasing adoption of it going forward?
Yeah, so that's a very interesting question. I think it's what is a blessing can also be a curse. So given how advanced South Africa's financial sector is, I think it's a blessing, but at the same time, this is probably the reason why mobile money adoption has been slower, because your payments system works. You've got access to, like Kungela was saying, you can go and get cash from a retail store. You can do a cashback. So you're at a Pick n Pay, a ShopRite. You're buying your groceries, you can get a cashback and get some cash from there. The distribution of ATMs across the country is relatively good. So again, like the idea of being able to get cash from an ATM, like that works. So all of these things which are working well for the country also then mean that, you know, to an extent, mobile money might then be a bit slower to take off. You look at countries where mobile money has taken off, look at, let's say, your Kenya, or more closely, if we look at, say, Zimbabwe mobile money has taken off significantly. There's a big player, EcoCash, which is owned by the mobile network, Econet. And the reason why that took off was there was a cash crisis in Zimbabwe. There was runaway inflation, and there were restrictions on amounts of money that you could get from the ATM. There were daily restrictions, like you could get up to maybe a maximum of 500 Rand a day from an ATM, and weekly restrictions as well. So people now had to find new ways of making payments. Like, they were forced into finding alternatives, and suddenly mobile money then became one of those mechanisms where you suddenly had merchants that will accept mobile money, and consumers can send money to one another. And I mean, you were talking about the number of banknotes that you would have to have if you're withdrawing your money as cash, right? Like, with the runaway inflation that was there, there were jokes about people putting money in a wheelbarrow to go and make a payment. So suddenly there was this necessity to find alternative ways of paying. And you find that, I think, when you've got that sort of a necessity, you then leapfrog your consumer preferences of, it's not so much a question of, do I trust the provider, but I actually need to make a payment right now, and I don't have an alternative, and you're forced to then adopt it. So I think South Africa, the parallel of that is, South Africa, your financial sector is very well developed, and if mobile money is going to take off, I think it has to be within the informal sector, which is, easily 200 billion plus, 200 billion market, people shopping in spaza shops, buying groceries and so forth, right? Like, there's a massive opportunity there. Am I hopeful that things will improve? So naturally, I think that if we look at what we know to be true, we know that technology is becoming more and more accessible. We know that more and more people have got access to smartphones. We know that the cost of data, cost of data in South Africa is high, but we know that over time this is going to come down. It's probably a matter of time before we have Starlink as an internet provider in South Africa. So we know that these things are true. I think if you are from computer science, there's Moore's law, which basically talks about hardware getting better and cheaper over time. So if we know this to be true, then I think, in the next 5-10 years, I am hopeful that mobile money will take off. I mean, again, if we look back 10-12 years ago, we didn't have WhatsApp, and we look at how WhatsApp has taken over. I'm therefore then hopeful. Yeah.
Thanks so much, Julian. Kungela, I wanted to get a perspective from you. What role do you think traditional banks have in transitioning South Africa to a cashless society? And what do you think are some of the challenges the financial services sector as a whole has encountered in terms of driving digital financial product adoption?
So I think, the big banks need to be much more open to collaboration, and not to say that's not happening. Even this past week, we had a pitch-off competition with the UCT FinHub students, looking to collaborate more with them, sharing more of our APIs and the likes. But I definitely think it needs to be, more across the board. And when I think about, where we are today, I think we've done very well. I do know that, traditional banks always kind of look like the bad guys when it comes to sort of innovating and collaborating. But I do think, to date, they've actually done pretty amazing. But, going forward, they do need to sort of evolve. And when I think about, the challenges that we have, I mean, a lot of, high quality, smart young people have left the country. That's a very big reality. So talent and all of those things. So it's like you're managing, sort of running the bank, but you've got all these other issues that are, need to be taken care of. And that's not the only one. We've also had energy crisis. But I think now we've had over 200 days with electricity, which is very, very good. But water is now the next thing. So it's almost like some of the issues can't really be fixed by sort of one type of solution, but a lot of them need to be much more, crossing between all the various players. But I think, the SARB has been doing very well in sort of, bringing up that conversation, sharing the stats. They've got the Vision 2025, and I mean, it's 2024 now, so I don't know how close we are, but, at least we are sort of trying. There was also another thing that I want to share with Capitec, where 2 weeks ago they released sort of an engine or a machine learning model that people can sort of download on GitHub. It's out there. And I think those are the types of solutions that we're going to see more of. Yeah, hope that answers it.
Yeah, awesome. Thanks, Kungela. So sort of transitioning to the final topic here, I think an important distinction that maybe sets South Africa apart from lots of other countries on the continent. Julian spoke about the fact that our financial services sector is relatively well developed, especially in comparison to a lot of our peers. That's a blessing and a curse. What makes, I think, South Africa a lot different to other countries on the continent is that access to the national payments system is reserved for banks. You contrast that with a country like Kenya, where mobile money providers, telecos, essentially non-banks and fintechs are allowed access to the national payment system. So that essentially means that if you're a fintech in South Africa looking to innovate in this space, you either need to register as a financial services provider, which entails a mountain of regulation, or you need to find a way to partner with a bank, right? And that naturally is quite a stifling environment for innovation. To the credit of the central bank in South Africa, they've acknowledged this, and there is an amendment of the National Payment Act called the Kofi Bill, which will essentially sort of look at amending the rules to potentially allow non-banks, fintechs, access to the national payment system, and I think that this is really positive for a development of the space. Another positive development in South Africa that we've not sort of spoken about at this conference as a whole is this idea of open banking. I think this is also really important in the South African case. So for those of you that don't know, open banking is the idea that banks are able to open up API endpoints for third-party developers and fintechs to access financial transaction information from their clients. Now, in most contexts in the world, open banking has been driven by a regulatory approach. So a central bank saying open banking is good for society, we need to implement open banking standards. South Africa is one of the few countries in the world where open banking has actually come about as a result of the market. So it's being driven exclusively by the banks in this country. We do not even have a sort of open banking standard for South Africa, yet all of the banks have collectively decided that this is something sort of in our collective best interest to actually do. So on the slide over here, I'm just showing you sort of a page from Nedbank's website, who I think are sort of at the forefront of opening up APIs for fintechs to use. And you can see there are personal loan APIs, customer APIs, wallet APIs, payments APIs, et cetera, et cetera. So I think this way of interacting with banks, especially in this context of South Africa, where fintechs need to work with banks, I think this sort of open banking revolution in South Africa is a very positive one. So, Kungela, from sort of the bank perspective, could you tell us a bit about sort of the importance of this open banking revolution in South Africa, how you see this benefiting specifically low-income consumers, and maybe mention one or two interesting use cases you see developing that are going to reduce the reliance on cash?
Cool. So I think something that's pretty cool with having such a platform, it means that founders like Julian can really focus on their customer segment and solving that sort of last mile problem, and then making use of things like the open banking APIs from the various providers to sort of help with the risk management, more of the back office types of functions. And that's really how I see this going. So for example, we've got the Nedbank wallet API where, if you're a founder and, you're sort of working on this and you want to include a wallet API, that's sort of a solution that you could use quite quickly. But I do think that the APIs could be a little bit more, what can I say? I don't think they truly open in the sense that you'll notice on the screen there's a Nedbank Open Data API. And what that's sort of giving you is they've got two data sets which are showing you all the list of ATMs and the branches where they are location-wise. Whereas if you go to a place like the UK, some of their open data APIs are actually giving you anonymized customer information and things that founders can actually use. Whereas with ours, it's just sort of giving you the capability. But yeah, definitely more could be done. The second question was
use cases.
Use cases. That is definitely a tough one. But I do think, I find there was a comment there around, us sort of sitting in our ivory tower. And I think it is somewhat true where, use cases are, yes, they are there, but I think we could do a little bit better to sort of bring use cases to, the general life of a South African. For example, for my master's paper, I wrote about, the tokenization of agricultural assets. So things like cattle are very important, and currently what people do is register your cattle with a, community or chief or someone who's looking after that, and they would have sort of your ledger to say who owns what, and then also branding the cattle. But it's quite prone to a lot of theft and everything like that. But cattle are an interesting one because, when you're getting married, you actually have to pay lobola, and that's done in cattle. But it's not as like back in the day where people literally bring like 5 cattle, onto the house. But it's almost now become like an internal currency system where, the two families will agree that, one cattle is equal to, let's say, 10,000 Rand, and then that's how they'll sort of negotiate. So some of these, I guess more payments or, banking sorts of things are playing out, but it's just not being connected to. So things that are in that space would be pretty cool.
Thanks, Kungela. And then just to finish off, Julian, as someone that works in the mobile money space, what do you see as some of the major opportunities for mobile money providers like yourself that are that's brought about by this advent of open banking in South Africa?
So I think there's a few ideas. The one, what Kungela has mentioned about being in an ivory tower, I think open banking will allow solutions to come up in ways that wouldn't otherwise be thought of in a boardroom, in a bank. I think there was a talk earlier on about how do we provide financial access without necessarily using like a mobile interface or something, and that was one of the ideas was maybe having voice prompts in a localized language, right? So there's suddenly these ideas that can come up from startups leveraging open banking. I think the other is also just the fact that like startups move faster than corporate, so that decision making and the ability to iterate and try out stuff like that just suddenly unlocks opportunity for startups. And then I think the third, and this might be a very controversial one, especially if there's anyone in the room that is, say, affiliated with with apps like SnapScan or Zapper and so forth. But I've tended to look at some financial innovation as there's financial innovation that happens at a convenience level, right? So if I'm downloading a SnapScan or a Zapper, I'm maybe based in Cape Town, I'm going to markets, Old Biscuit Mill, farmers markets, and I'm paying for breakfast or coffee on a Saturday morning, and I'm scanning with SnapScan. I already could pay with my card. I already could pay with my watch if I wanted to. Then I feel maybe hippie because I'm using this SnapScan. And then Zapper, if like I'm spending a lot of time in Johannesburg, you can use Zapper to pay for your parking ticket. So it's like at a convenience level. And I believe that like by getting access to open banking APIs, you can actually then start to create solutions and innovation at a core level, like at a much lower level that's solving a more fundamental problem and not just at a convenience cherry on the cake type of level. So maybe a controversial opinion, but yeah, that's my take.
I think I tend to agree with that opinion as well. So I'm cognizant of the fact that we've run out of time, and I know we are a bit behind as well. So I just wanted to thank our speakers, Julian and Kungela. Thank you all for attending. I think we're out of time for questions, but if you did want to continue this discussion, we will be around. So please be sure to find any of us outside. Thank you very much.